Well, economic fears over the coronavirus outbreak are manifesting into action. Yesterday, the Federal Reserve slashed interest rates by 0.5 percentage point on Tuesday. It's all an attempt to give the U.S. economy a shot in the arm. For a look at the greater impact, I'm joined by Heather Long. She's an economics correspondent for the Washington Post. So, Heather, can you put this sort of into perspective of how rare it is for the Federal Reserve to cut interest rates by 0.5 percentage point?
We haven't seen this since the 2008 financial crisis. So this is a highly unusual step that they took yesterday. It was also an unscheduled cut. So they have a meeting in 2 weeks, but they felt it was necessary to act now and not wait 2 more weeks. So that tells you the gravity of the situation and that they see that there really is a growing risk to the economy right now.
So do you think, is there a way to tell, is it having the desired effects that they were hoping it would have?
Well, it certainly, if you looked at the stock market and the bond market yesterday, there was a lot of hope that that rate cut would calm fears. Part of what they're doing here is trying to get ahead of confidence, to get sort of put a baseline on the confidence so it doesn't slip even further and the recession fears don't rise even more. Unfortunately for them, after they announced this rate cut yesterday, the stock market rallied for about 15 minutes and then it fell for the rest of the day.
Yeah.
So we're seeing a little bit better situation today, but it's going to be a rough ride for the next few weeks. I think the reality is if you're the Federal Reserve, you know that this rate cut can only do so much. The problem right now isn't that the cost of borrowing is too high. The problem is we don't have a good handle on this coronavirus. People are nervous, they're staying home, they don't want to go out and spend. The Federal Reserve can't cure that no matter how low interest rates go.
You know, the president's been a frequent critic of the central bank's monetary policy. He took to Twitter urging further easing in order to, in his words, come into line with other countries and competitors. Is that an option? What more can the central bank do?
Well, they can still lower interest rates even more, and Wall Street is expecting that to happen probably in April for the rate to go even lower. We've also seen other central banks around the world respond. So after the Fed took its action on Tuesday, today we see the Bank of Canada just made a similar move. We've seen the Australian central bank cut. The European Central Bank is readying some sort of options there. But again, most economists right now say the problem isn't the Federal Reserve. They totally disagree with President Trump. They say the problem is actually the White House and Congress. They need to pass this emergency spending bill. They need to show that they have a better handle on what's going on. We need to do more widespread testing. Until that's happening, until people, both business leaders, Americans, feel that the federal government has their back with this coronavirus, it's going to be impossible to stop the uncertainty that is really causing these nerves in the stock market and across the country that's rippling through the economy.
I'm just hearing folks on Wall Street talking about taking laptops home, making sure they're working, a sense that they're going to have to be working from home the sense of panic is just so real here in New York. I want to talk to you a little bit, though, about what you write. It says a broader worry has emerged as many U.S. businesses are prohibiting work-related travel. There's also fear that consumers will pull back on their own expenditures as the virus spreads, schools are shut down, and the stock market swings. I'm curious, Heather, do you believe that this could trigger a recession?
Well, it's certainly been alarming to me to talk to economists in the last few days and have some of them say to me that it's a coin toss probability right now as to whether the global economy goes into a recession. That's not what I like to hear. That's not what anyone in the United States likes to hear. That said, the next few days are really critical. And what you're watching with American consumer confidence, what really drives that is whether people feel secure in their jobs. So at the moment, that's why everyone's really focused on these people who don't have paid sick leave in the United States. A quarter of workers don't have that. So yes, people on Wall Street can stay home and with their laptop and still do their work and get paid, but there's a lot of workers, particularly in the service sector, almost half of workers in like fast food restaurants and in the hospitality industry, the travel industry. A lot of people are paying attention, Las Vegas, Orlando, Florida. When those workers start to feel like they are actually losing money because they aren't able to work and they're being told to stay home, they're not going to go out and spend. And that's when you start to see that really negative chain impact. We're at the early stages of that, but that's what everyone is really trying to prevent, that kind of wider ripple.
You know, in addition to the Fed rate cuts, President Trump also called for a one-year reduction in payroll taxes. Do you think that could help stabilize the economy, especially as we're dealing with the coronavirus?
It would definitely have an immediate impact. It's a tactic that was used during the 2008 financial crisis. It was also used after 9/11 to try to revive the economy. 75% of Americans are paying those payroll tax cuts, or taxes every week in their paycheck. It's the amount of money that comes out in your paycheck to go to Social Security and Medicare. So if you don't have to pay that, that's an immediate boost. You know, we're talking about hundreds of dollars potentially in the next month that would go into people's paychecks, particularly, again, these working class people, people who might not have that paid sick leave. That just gives them a little bit of an extra cushion in the coming weeks in case they have to stay home, or in case they feel that they have to go and get tested and pay for those extra medical expenses and precautionary measures. We want people to do that.
All right, Heather Long from the Washington Post. So grateful we can break down the economics behind all of this. Thank you, Heather.
Thank you.